We're going to talk about life insurance. Wow. This is a chart, and I want you to take a look really first at the green line. Look at what's happened to the ownership of individual life insurance. It's gone down and down. And you can see back in the 70s, group started growing. That started filling the gap, and voluntary, but even that's declining. I guess the only good news in the chart is at least we stemmed the flow here. But when you really look at this chart and you look at what's happened since the 60s, we've really declined. We're touching less households. What are we going to do about that? That's why we're all here, right? But I look at this and I see opportunity too, because frankly, there's a need. We can't kind of get up in the morning, those of you that are building products, developing products, and say, hey, nobody cares. There's a lot of folks that need our help, and there's a lot of opportunity. And we know that too from our data, because our data tells us that 60 million households actually say, I know I need more life insurance. Of course, we're going to get to it, but then why don't they buy? We got to do something about that. We got to get to more of them. How big is the market? Well, about 48% of folks say, I know I need more. We calculate that on average, their gap is about $200,000 per household. That's an opportunity of $12 trillion. That's a big opportunity. So we have our work cut out for us, but we shouldn't think that nobody gives a damn. In fact, what we know, just a little under 19 million people started shopping. They just didn't finish. They took some overt action to say, I know I need it. I should do something. That's why so many of you in this room and so many of your companies are working on how do we make the underwriting process easier? How do we increase customer engagement? How do we leverage technology? Because we got to get to these people. There are too many people who need our products who aren't getting them. But what really I'd key into, 42% of those folks who started shopping have children, and they didn't finish. They're prime buyers. And 56% of millennials that started didn't finish. I think Eric will have a lot to say about that for you. But guess what? There's another 26 million Americans. They haven't even started. They know they need it, they believe they need it, but they haven't done anything. How are you going to engage them? How are you going to get them interested? And believe me, they need us. In fact, 15% of people say if either or the primary breadwinner or one of the two wage earners dies, 15% say, I can't make it 1 week. 20% say I can't make it a month. People don't have a lot of savings. They don't have it stored up like squirrels with the nuts for the winter. In fact, about half the people can't make it even 6 months without that paycheck. So the number one question I get, so Bob, with all that, why don't they buy? Well, we have a lot of data on that, but I'm going to hit the two key ones. 63% of folks cite as one of the reasons they don't buy, it's too expensive. And we've done some work around that. And we know that what they think it costs and what it actually costs are distinctly different. They think it's more expensive than it is. They think it doesn't fit in the budget. But in many cases, if they actually knew what it cost, they could afford it. So what are you going to do about that? How are you going to get that message across to them? Another 61% say, hey, I know I need it, but I have other priorities. I mean, hell, wouldn't you really rather buy a large screen TV and get instant gratification than buy life insurance? It's like we're competing with a lot of things. My cell phone's dying. Which is going to kind of rise to the priority list? But there's more to that one. Wages haven't increased that much for the last decade. People are tight. They also tell us they want to save for retirement, but they know they're not saving enough. Where do you make the decision? How do we bring the life insurance decision higher on the scale? Now, every 6 years, we do this very in-depth ownership study. But some interesting things. Let's look at 2010 first. We'd come out of the big downturn. 50% of people said, wow, I need life insurance. Oddly enough, by 16, they were feeling a little more comfortable. Only 41, 42% said, I think I need life insurance. But here's where I think there's an interesting anomaly in the numbers. Back in 10, only 25% said, this is the year, honest, really, I'm going to do it. That was up to 45% in 16. Why did so many more say, it's really time for me now? Now, don't get too excited, because what we really know is, no matter what they say, no matter what they intend to do, in fact, only about 10% actually buy. But how do we start to close that gap between 10 and 45 that say, really gonna? That's our dilemma. So that big question, why don't they buy? So what I'm going to give you a little bit of personal opinion. I got no research to back any of this up. But I'm going to give you some of my theory about some of the other reasons people don't buy and why it may never be exactly like it was in those good old days in the 60s. First of all, in 1900, 75% of people died before age 65. There's a reason that Social Security was set to start paying at 65, because most of you were going to be dead. Now, the actuaries in the room understand they never assume people would live as long as they are, and that's the other reason we have a little bit of problem with our defined benefit pension plan liabilities, right? But today it's almost the inverse. 70% of people die after 65. So think about how much more prevalent on your mind death was back then. But it's even more than that. Remember, World War I, World War II. The silent generation, my parents, they were touched by war. They saw dying, frankly, in a level that we don't understand. Everybody knew somebody who lost someone, who went to war and didn't come back. Death was very much more top of mind in their face. And what about things like cancer? Take a look at the difference since 1950, and the best numbers I could find were 2010. So by 2018, those numbers have even improved. But prostate cancer from 43% to nearly 100%. Nearly 100. Breast cancer. I'm sure I've got a lot of survivors, including my wife, in the room, right? It's not a death sentence. But does that change people's thinking about when I'm making those priority lists? I'll get to the life insurance, but what's the hurry? And think of all these dread diseases. When I was a kid, these things existed. Today, they're almost non-existent. Now, the other thing, though, I've seen numbers over time that predict kind of what actually the death rate is from a certain cause like cancer and what people think the death rate is. And surprisingly, they actually think the population is more liable to die from cancer or in a plane crash than the reality. But that brings up a really bigger conundrum. If that's what they believe, then shouldn't they think death is more imminent and I'm going to buy? And the answer is no, they don't. And this, in behavioral economics, is the reason why. Yeah, I know that stuff happens, but that happens to them, to someone else, not me. And that's one of the reasons that they can put it on the back burner. And we know that actually when someone dies at your church or in your synagogue or in your family, suddenly people start to ask and think about life insurance. Why? Because it's come closer to them. It now becomes more real. Honestly, in my early days when I was selling life insurance, anytime anyone significant who was well known at the synagogue died, I'd have people coming up to me and say, "Can you sell me some life insurance?" Because death now was closer to them. You're wondering who those are. That's Annie and Benny. Those are my folks. Why are they in my presentation? Well, because here's another reason I think people don't buy life insurance. My father took me aside in high school, and he introduced me to Al Drexler, our prudential agent, career agent. He handed me a life insurance policy that he bought me when I was born and made me sit down with Al and encouraged me to start my own program. Parents aren't talking to their kids today about you should buy life insurance. That's a very big dynamic. It was a social imperative. My grandfather, I remember him telling me that in the Depression, the one bill he paid was his life insurance bill. I was a 10-year-old kid. Why was he telling me that story? That's how much life insurance was embedded into our social fabric, and it just isn't a necessity in people's minds today. And then, of course, for the young, hey, we're invincible. So it's really not going to happen to me. And these are all the reasons I think it is much harder today, that the wall, the barrier is higher to try to convince people that they should buy it. But at the same time, I repeat, there's those 60 million people. There is an opportunity. So how are we going to change the conversation? What do we have to do to make it a social imperative again? And remember, there's less agents out there, way less agents. There's less people telling that story one person at a time. So I actually think those of you in the business also have to take on a little more responsibility, have to talk to neighbors and friends and put things out on social media that kind of helps people get that this is real. We got to kind of go back to some of the old-fashioned stuff. Some of you are saying, what's that? Well, what that is a unique financial product. It's called life insurance. It's the only financial product for cents on the dollar, can deliver a wheelbarrow of money when it's needed the most, when a wage earner, when somebody important in our lives is no longer there. There is no other financial tool that for 1% a year can deliver that money. Old-fashioned? Yeah, but it still works. And then we gotta think about the Beatles. What of all our research says? Why people buy? Because of love. That's what we're selling. Buying life insurance is an unselfish act. I'm not going to get any immediate gratification. I can't play with it. It doesn't do anything. It sits there in the sock drawer. But you know what? It does do something. It does something for the people who we care most about, who we leave behind. And that's what makes it so special. But we have to really get people to understand the love, and love is what it's all about. And it's about real people. And I don't think anybody does as good a job as Life Happens at telling the story about the magic of our product. So join me for a moment to hear somebody's real story about how life insurance impacted their life.
When I met Nicole, it was pretty much instant chemistry, and shortly after that, we were married.
What was special about Nicole was the way she treated others and the way she cared for her family, her friends.
Nicole was an amazing mom. Always wanted to be a mom ever since she was a little girl. Life insurance was important to Nicole because we had these kids that we loved and wanted to take care of, and it was just no longer her and I.
They were in their mid-20s when I first met with them. Jason was in school finishing his degree at the time. Nicole ran a small daycare out of her house so that she could stay home with her kids. They ended up purchasing some term insurance to make sure that everything was going to be taken care of if something happened to either one of them. She and Jason were coming home from a birthday party and saw a couple of vehicles racing on the freeway and had an accident, spun out, and Jason, being the Samaritan that he is and having EMT training, pulled over to see if anybody was injured.
So I pulled over and got out and dialed 911. And then once we got there, everyone was okay. So I told her to go back to the car, and she did. And I watched her go back across, and evidently she tried to come back across. She was hit by a passing vehicle, and she died.
Jason was devastated. He had to figure out how to work full-time and take care of his daughters and deal with the loss of his wife.
He had forgotten all about the life insurance, didn't realize that it was even there with what he was going through.
The biggest thing the life insurance did was it gave me time. Time to collect myself, time to heal, and I just took time off to be with the girls. People should consider buying life insurance because you really have no idea when life is going to change. If we didn't have the life insurance, we would have been pretty lost. I don't know how we would have done it, to be honest with you.
Real people, real stories. Not corny, it's life. And the life insurance often is the difference, whether there'll be money for food on the table or whether the family will be able to stay in the house, to live in their own world the way that someone would have wanted. So, do we make a difference? $76 billion was how much death benefit was paid out in 1 year, in 2016. It's not one family, it's not two families. $76 billion out there that made a difference in people's lives. It's real. But we also have to change the conversation and talk about twofers. What's a twofer? It's accomplishing two things with one product. I think a lot of the mutual whole life sales folks do a great job with this. I think with Index Life, some others have learned how, but we have to talk about the living benefits of life insurance as well. About how life insurance can be the dollars that are needed to pay for college education, to pay for a down payment on a car, to pay for down payment on a house. Things that happen because it's a great form of long-term savings, not just short-term. We used to tell really good stories about magnates, about people in business, and how life insurance made a difference. J.C. Penney to pay payroll back in the Great Depression and stock market crash. Believe it or not, maybe Disneyland never would have happened if Walt Disney couldn't borrow money from his life insurance policy. And even Ray Kroc used life insurance companies' money to help expand what became McDonald's. And believe it or not, John McCain had to borrow money from his life insurance to help his underwater presidential bid. We used to be really good at telling those stories, but most of these are pretty old. How are we going to tell new stories about people that are contemporary and how life insurance made a difference to them? But my message to you today is really, be proud. Be proud of the industry you're in. Too many people today are saying really nasty things about the insurance business, and especially health insurance. But we all get wrapped into that, and it's easy to say, oh, life insurance. What do you do for a living? Life insurance. We got to be proud. We help families. We make a difference. It's not corny. But each of you needs to become the goodwill ambassadors too. Your companies need to help get the message to more people to make it a social imperative again. And you know what? We do a lot of good for a lot of people, but we do good for the economy. 1 in every $6 of long-term savings is actually in life insurance. And guess what? We employ 2.6 million people in 2016. And take a look at what we do for the U.S. economy. $5.8 trillion invested in the U.S. economy. 20% of all U.S. corporate bonds. $745 billion in U.S. government agency bonds. We do a lot of good for the social fabric of this country. And guess what? It's not just the life insurance, it's our life insurance companies. We write out checks every day for $1.5 billion. That's long-term care payments, that's DI, that's life insurance and annuity payments. $1.5 billion a day. So ladies and gentlemen, thank you very much for being part of this great industry. To our sponsors, thanks for helping us and being part of it. But to all of you, be proud, talk to people, help make life insurance a social imperative again. Thank you very much.